What's up, everybody? It's Stephen A. Williams, president and founder of thecreditrepairshop.com. And in today's video, we're going to talk about 1099-C, cancellation of debt. We're going to talk about late payments on credit cards, something that you need to be aware of. We're going to talk about some questions or statements that people have made in the comment section. Some of them, I don't care too much for, but people had their own opinions. I'm going to talk about business people, where some people think that business people are getting hurt by people's ability to do 1099, for 1099-Cs to be filed. And just to be clear, a 1099-C, cancellation of debt, is not filed by you to the creditor. It is the opposite. The creditor chooses to do the debt forgiveness. That's the way it's done. So I don't want any confusion on that. So right here in my hand, I have a fresh 1099-C from Ford Motor Credit, $14,798. Was filed 2022. This client just got this year in 2023 for the tax season. So it is happening. It does happen. But I want to talk about number one. I want to talk about, just because a company files a 1099-C does not make the individual deadbeat. And this is the first comment that I want to answer that's in the section. And people, you need to stay and listen to this, because I'm going to really clear up a lot of stuff about 1099-C and also about your thinking, because people try to get your thinking going in the wrong way, get you unfocused. Time is passing and you don't get anything done. I'm going to tell you what you got to do to get things done. And yes, it's going to take work. I'm not talking about some overnight stuff. I don't play in that arena. So first of all, if you get a 1099-C from a debt collector or from an original creditor, you are not a deadbeat. You are not a deadbeat. Someone made a comment that I'm trying to help people become deadbeats. Well, first I want to clear up something real quick. You are not a deadbeat if you are financially, like you whatever reason you had ran into where you messed up your finances. It is not, you're not a deadbeat. Yes, we all take faults for the bad decisions that we make, but you are not a deadbeat. And I'm going to close this circle very soon to show you that we all go through these troubles, including the banks and the creditors who make loans to people. So what I have right here is a 2008 crisis. These are the banks that were bailed out in 2008. So now let's look at these lines here. I think you can see this pretty good. I'm gonna make it a little bit bigger. Let's look at this. So we have Wells Fargo right here. Wells Fargo. Let me get my other so you can see this clearer. We have Wells Fargo right here. What is that? $25 billion. Wells Fargo. We have, this must be another smaller bank, but they got $2 billion. Bank of America, $15 billion. JP Morgan Chase, $25 billion. Citigroup, $25 billion. Morgan Stanley, $10 billion. This is $1 billion. Goldman Sachs, $10 billion. Bank of New York, Mellon Court, $3 billion. And it goes on and on and on. So are they deadbeats? Because there's only one way. There's only one way that every business in the whole entire United States makes money. And that is they get it from consumers. We are all consumers and we all are customers somehow, some way of banks. Our money is either pooled from our investment or retirement accounts into investing in companies. Companies have their place. We have our place as consumers, and business owners have their place as, those are corporations, but regular business owners, we have our place. Now, are they deadbeats for taking this amount of money? So what I'm getting to close this circle is that everybody can have a financial issue come up. for any reason. We're not, some of it is the fault of us making bad decisions, and some of it is the fault of a situation in the economy. But stop thinking that just because you had financial problems, everybody else must be perfect because they don't have financial problems. I just showed you here, and these people have people that are supposed to be the utmost top educated financial wizards of the whole world, and you see that even when there was a downturn, which is what we have when we struggle financially, they had a downturn. They got a 25 billion, 2 billion, 15 billion, 25 billion, 25 billion, 10 and 10 billion dollars. So are they deadbeats for being able to do that? So bottom line with the whole thing is that stop thinking about what people will say about you. Stop thinking about what you think people might think about you, and start thinking and focusing on what is going to be needed to get you out of your situation so you can resolve it. So now I had a conversation with a gentleman yesterday, and he said that, hey, during COVID, I just could not pay the bills, lost his income from his job, wife lost her income, and they've been kind of recovering, but they're struggling. And he has credit card debts, probably close to about 30, I think he said 30 to $40,000 of credit card debt. And I said, first thing I asked him, are you paying on those credit cards? He's not paying on the credit cards. So just so you know, credit card companies have to go through a process of 180 days of no payments, and then they will charge off that debt. When they charge off that debt, it takes it into a whole new category where you could potentially do settlements. All types of options are available. So step number one, if you have credit card debt and you are making the minimum payments, you cannot go into doing a settlement with the credit card company. And people will ask me, well, if I stop paying on my cards so I can get to that charge-off status, can I do that without hurting my credit? No. No, you cannot do that without hurting your credit. This individual asked me a similar thing. He said, well, if I don't settle those, will I be able to repair my credit? And I'm like, these companies are going to start coming after you for this money. These companies are going to start suing you for this money. Regardless of what you do when you try to move forward in your credit, this stuff is going to keep coming up saying that you owe this money. If you go try to buy a house, it's going to be on, when they run a title search on your name, those debts are going to pop up. So it's not going to be just that simple and easy. And he also asked me about a 3-step process. I'm going to throw this in there before I get to the solution that I told him. And he thanked me for talking, like being direct and talking to him about a solution that he had, the path that I believed he had to take. But let me tell you about something that he had mentioned. He said that, well, I watched a YouTube video, and they said if I do this 3-step letter and they don't prove, then it comes off of my credit reports. And I said, let me make you aware of something. When they're talking about doing a 3-step letter, that's where you're sending out a debt validation letter. They have to respond within a certain period of time, and then you do your response letter saying that they didn't respond in a certain period of time, and it comes off your credit. That's 100% true that can happen. Here's the thing that he needed to be aware of. When you send out a letter saying you need to prove the debt, and you send that to an original creditor who has not sold the debt to a debt collector, that is not going to work. So that is not your solution. So number one, please pay attention to where you are at with your credit repair process, with your getting out of debt process. Because if it's with the original creditor, you are not, and it's not charged off, you have not made it into that other arena yet where you're going to start being able to do settlements. All they're going to do is they're going to just talk to you about making some type of payment arrangement. They might lower your payment, do something with the interest rate, defer your payment. They're going to look at all of those options because they want to try to get 100% of the money plus the interest. But if you're not at that situation, then you're not going to be able to start doing some of the other strategies to start getting rid of that debt. But for him, he had stopped paying them more than a year ago, more than 6 months ago. So they started charging off, and I said, well, the phase that you're in right now is that these companies are going to either sell it, and he started naming off some of the companies that he had, and he mentioned American Express and Discover, and so I said, with American Express and Discover, they're known for hiring a company to come after you for the debt. And that it could take up to a year of them going back and forth, and then they might decide to go ahead and sue you, which is something that they do. And also, I've been seeing that some of the other credit card companies are now, rather than selling off the debt, that they're hiring debt collection companies to go after people for the debt. Now, but still, so this is what I told him. I said that, number one, I said, have you been getting calls from them? He said, yes, I've been getting calls, and I know it's them, so I just put it on my phone to knock that call down every time it came in. And I said, you don't want to do that. You don't want to do that. You want to open up the communications. You want to see what's available, because if you open up the communications and you talk to them about what your financial situation is, there's going to be a whole bunch of options that are going to be laid out on the table for you. At least you know what they're trying to do. I just made a video just the other day from the ACLU that showed people that were like at the park, having lunch from work, at the park, enjoying having a lunch, and the cop comes by and is checking license plates at the park. And the young lady had a warrant for her arrest from a debt collection company because she had never responded to their request. So they had the judge put a bench warrant out on her. And they will do that. So you want to have the communications open. You can stop any of those type of strategies that debt collectors try to pull if you have the communications open. There's a lot of things that they cannot do if you're communicating with them, because you can tell them your financial situation. If you don't communicate with a debt collector, you don't communicate with an original creditor, what do you think they're going to think? That they got all that you're just hiding money, you don't want to pay them. So I said, this is your strategy. And he did mention bankruptcy. And I said that I can't advise you on bankruptcy, but what I can tell you is that this is a way that you can work your way out of it. And I said that all of the company, first you got to know how much you got. Put it on paper so you know how much debt you have. And then you start taking those calls and you tell them, my situation is just, I can't pay it. And then they're going to probably say, well, to get them to potentially do one of these, a 1099, they're going to take your hardship. And they may say that there's just no way, if we hire a company to go sue this person, we're just spending more money after the money that we've already lost. And they might just say, just write the debt off. Just write it off. Just write it fully off, do a 1099-C, let them deal with it, and you will be able to use a waiver form to not even have to pay taxes on that there. But that's off your back. What if you had 10 credit cards and 3 of the 10 did a 1099-C and took the weight off your shoulders? So if you owe $30,000 and now you owe $20,000, how would you feel? Would you feel like you're getting somewhere, that you took a step forward? So I told them, you got to take those calls. You got to tell them what you're going through. And you got to listen to them for their options. And then you got to start saving money, because everybody here, including myself, when I went through it, and you here, you have the power from inside of you. If you had a power from inside of you, if you truly believe in yourself, to put something together to potentially be able to make offers to these credit card companies. If you don't, then you're being honest with yourself, and you truly don't. You're on disability, whatever that is, then you need to tell them what's going on so they can hurry up and get to this for you, so you can be able to sleep at night. Because it's more than just not being able to pay the debt. It's more than all of that stuff. People call me, they email, they text our company. I can't sleep at night. I don't want to tell my wife how bad it is. I don't feel good that I cannot be the provider for my family. Single mothers, single fathers saying, hey, I just got to do what I got to do. I got to take care of my kids. We've had people in the past where they had used their kids' social security number to be able to keep the electric and stuff on. It's more than just about money and paying bills. This stuff really tears people up on the inside. And I don't believe that anyone, I don't care what anybody says, goes into the whole situation, or some, I'll take that back, because there are some rip-off people. But I would say that most people, number one, start getting stuff on credit cards because they never had the ability to get stuff when they were younger. They want to get stuff to be a certain way, to look a certain way, to feel a certain way. And I know that, and I say that from personal experience. But I don't believe that no one really tries to get the stuff and not have some type of intention to pay it back. It's just that people get caught up. People get caught up, and it makes it difficult. And all of a sudden, you got payment and payment and payment and payment and payment. It stacks up, and you're like, where is all my money going? It's going to pay those payments, and it's going to do whatever additional things that you want to do just so you can have a life. So I told him, you got to call them up, and you got to, number one, add up what you got. Call them up, and you got to start taking the calls, and you need to start seeing what options are available and express what your hardship is. And if they need you to put it in writing, they usually do. If they need you to prove it financially, do it. Because basically what you're trying to do is just buy time. Buy time for another day. Let me tell you something, a quick thing. Let me just say something about what happened to me. When I was in the United States Army, I was still in the Army at that time. And I remember calling my mom. I'm 18, about to turn 19 years old. I'm in the Army. All there, never really been anywhere by myself, But I remember calling my mom, and I said, Mom, I just don't have no money. We barely got any money when I was in the Army. I think it was like $800. If it was $800 a month that I was making. I was living in the barracks. And I remember calling my mom, and I said, I just don't have any money. And my mom, this is what she did. My mom pawned her rings and sent money down there to me. And I had said, when I got that money, I told my mom, I said, this is the last time that, like, I'm ashamed of myself, and that I'm gonna do better. Like, I'm gonna just, I didn't know what I was gonna do, but I just made like promises to her and promises to myself. And I went about changing my life, like going through, and it took time, but changing my life. But let me tell you something, why you gotta be consistent about who you are. You gotta be strong about who you are. You can't be weak about who you are, because not more than, so we got, when I'm 18 years old, when I'm 20 years old, 2 years later, I had started my first successful company. And then 4 years after that date, I was making over $100,000 a year from that business that I started in 1990. And then I went through my financial hiccups from 94 all the way to 99. But this is the thing, is that if you put in the work on something and you make a commitment to yourself, you don't know when that turn is going to happen for you. So that's why I tell people, I know that people, like, he even wanted, when will they do this? When will they do this, do that to do a possible settlement? When could they potentially give me a 1099-C? I don't know that stuff. Just like I didn't know that 2 years from the date that I had got my mom to pawn her rings to give me some money, and I'm in the United States Army, that 2 years later I would be on my way to a very successful multi-million-dollar publishing business that I started that I still own, and it's almost 34 years later that I still own that company today. So you never know. So put in the work. So for his situation, what I told him is you got to put in that work, and the work is not you want a solution. You want something to happen, either a good settlement or 1099, but you got to put in the work. None of that can happen unless you put in the work. And when it comes to bankruptcy, just so people know that they changed the laws in 2006 for bankruptcy. And you can't just go walking up in there and saying, hey, I'm bankrupt. You're going to have to prove that you're bankrupt. You're going to have to take classes if you are able to file bankruptcy, even if it's a Chapter 7 or Chapter 13. And just so you know, your attorney is going to have to also sign on those documents. They're going to have to prove that if you're trying to go for a Chapter 7, you're going to have to prove, and they're going to have to sign off on that. That means that they can lose their license if it's found that you're lying, that you're hiding assets. So it's very difficult unless you are truly financially just bankrupt to file a Chapter 7 bankruptcy. But that's what it's there for. That's what it's there for. And there is no shame if you get to that point to do it, because you don't want to kill yourself over being in debt. You don't want to kill yourself to be able to make these payments to people. You want to do what you can do. Now, another thing that question that someone had was that about late payments to their credit cards. And this is something that really catches people, because when you're making the payments to the credit card, something that you need to be aware of is that there's a statement date. If you look at your credit card statements, there's a statement date and then there's a due date. Usually what they will do is that they will report to the bureaus on that statement date. So even if you pay off, say you had a $10,000 balance, and even if you paid it off 100% on the due date, it was still reported to the bureaus on that statement date. So you need to be aware of that. And then there's a grace, which is usually 10 days, what they'll give you as a grace. And that's where this question came from on YouTube about the grace. I'm here to tell you, and this is where experience comes in, and I'm glad this person asked this question. Do not trust the credit card company's grace period. If you're paying your insurance, stuff like that, yes, you're going to have a true grace period. Do not trust the credit card company's grace period, because this is the reason why. Is because they're gonna, when you flip over past that due date, you have 30 days on that due date. Even though you have a grace, they do not give you a grace on the interest. So this is how you can end up having a fee where it's not technically a fee, like a late fee. It's just another fee because you didn't pay it on the due date. They have that in the terms. So think about it. Let's look at logic. Statement date for the bureaus. Statement date for the bureaus. Due date for when they consider that you need to make that payment due for the 30-day payment cycle. Grace period, usually 10 days. But the interest does not stop just because it's grace. When they give you grace, that's on the payment. They don't give you grace on the interest. So if you're carrying over $10,000 into a new cycle of 30 days, you're going to get hit with the interest on each day until that payment is credited. Until that payment is credited. This is how they make their money. This is how they make their money. So you're getting hit. Number one, you're paying a fee that you didn't want to pay. And then number two, if you're trying to keep your scores at a certain level, you're paying a price with your scores fluctuating, because it can fluctuate 20 to 30 points based on how much debt you're carrying over on the statement date, even though you're paying off that total debt, even when it's due. And then if you carry it over through the grace period, keep in mind they're not saying that that counts for the interest rate. So you need to be aware of that. Now, let's see here. What's my other question here? Okay, someone said just let, you know, just let's just let it go for 7 years. Let's just, run for 7 years. That's what they said. Run for 7 years. 5, 6. So you're gonna run for 7 years on not paying any debt, not doing anything. So let's see here. There's 12 months in a year. 12 months. So you run for 7 years. Let's just fill in the blanks of what you could do in those 7 years. So, okay, if you have bad credit, you're going to pay more than what people with good credit pays for. So number one, other than just running, because you know you're going to run for 7 years. You're going to also pay more for 7 years. You're going to also get denied for 7 years. What could we do to what could we do to utilize our time more efficiently over 7 years? Because see, this is the thing that people, I don't know, we all had this problem. Regardless of what you do, if you run, you keep your credit bad by getting denied and you pay more for stuff, there is one thing that is guaranteed that will happen. One thing that is guaranteed that will happen is that you're going to waste 7 years of your life that you cannot get back. Because with using your logic, the person who put this on here, using your logic, on the 8th year or after the 7th year, when it's all done, you're going to start what? Rebuilding your credit. You're going to start building your life. But what one thing you can't do, you can rebuild your life. You can stop running. You can even start paying less. But what you can't do is you can't go get 7 years back. See, you thinking that you look at people, when people think this way, they're only thinking about what the debt collector or the creditor is losing. They never look at what they're losing. They think that they're gaining, but they're actually losing. Those companies are going to keep moving forward. Those companies are going to do what they got to do. They're going to do business. They're going to do business with new people, do business with their own customers. That's business. But whoever does this plan here is going to waste 7 years of their life. And when they start to rebuild their credit so they can start getting the benefits of not having to run and look over their shoulder, moving to different addresses so they don't get served or whatever they got to do. And if they get judgments against you, this 7 years turns into a potential 20 years. 10 years, and then they have to renew 10 years later. So the running for 7 years, and at some point any lawsuit comes through, you could be facing another 20 years. So now you got to run for 20 years, possibly 20 years, pay more for 20 years, and get denied for stuff for 20 years. Wouldn't the plan be good, even if it took you 4 years like it took me? No, it took me 5 years. Even if it takes you 5 years to get out of all of that, even if it took you 5 years, would it be worth not having the potential of 20 years? And wouldn't it be worth not having to keep running and pay more and get denied? Because the thing is like, say for instance, you settle all of those debts. You had, like that gentleman, $30,000 in debt. $30,000 in debt. You settled it for, let's just say it took you 4 years, and you settled it for $15,000. Say you settled it for $15K. You settled all that debt for half, $15K. What if they go and buy a house after that? What if they go and buy start a business or something like that. And then now for them just getting that off of their back, which is something that I had to do with paying off debt. I had to do settlements to get it off of my back so I could be more clear to be able to do more things for my family. And that's what I did. And I ended up making way more than what I was settling the debt for. Way more. But I didn't have to also look over my back worried about the debt collector. It's over with them. And I'm able to move forward in my life. Doing this thinking like this, I love doing this because when you start to think and look at it this way, and you start to say, I need to make more logical decisions based off of what I see for myself and my family, and I don't want to sit there and have to go through something like this for 7 years and potentially 20 years. Like, you don't want to go through that type of stuff. You just do not want to go through with it. All right. If you need help with your credit, please visit us at thecreditrepairshop.com. Watch video What Makes Us Different so you can see my 8-point validation process, my 2-phase settlement process. If you need your credit reports and scores, go to the website 3scores.com. Grab your TransUnion, Equifax, Experian credit reports and all 3 scores. It'll give you everything on there. And if you get those reports, you can get them to us. We'll do a free review letting you know exactly what you need to do to clear up your credit and to get out of debt. If you have debt collectors coming after you, grab my 3-pack of letters. That statute of limitations letter to stop debt collectors who are coming after you for debt that is past the statute of limitations to collect. Cease and desist collection activities letter to stop debt collectors from coming after you if they've purchased a debt. It's going to ask some questions to make sure that it's clear that you know your rights when it comes to them buying debt, and that they got to have more than just a couple of statements. And then a debt validation letter that will ask more questions if they do continue coming after you to make them go to a higher standard on proving the debt. Thank you for your time. Please subscribe to the channel, post your questions and comments. Please share this video. This is Stephen A. Williams, President and Founder.